The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 13th of March. It is Thursday. Look at this little attempt right here for the E-mini to try to have a little bit of a rally. We'll see if the 9-period moving average can cross positive, and then it can get to the 55.88 resistance at the 200-period moving average, and the next one will be 55.92. That's a big ask right now, but that's kind of what we're looking at as a chance. We're looking at the volatility index pulling back from the intraday high of 25.29. It's at 24.27 right now. Day is young. Let's go to the Dow. The Dow is down 117 at 41,230, a little bit better than when I gave you the 10 o'clock market update. Day is young, as I said. Let's see at 1020 if we got any kind of support. Now, I speak about this all the time. I say that people say market hates uncertainty. But what we've got here is uncertainty about uncertainty. That's really the issue. And because of it, in fact, if I said to you tariffs, okay, tariffs is a big thing. If I said to you geopolitical, geopolitical is a big thing. You can go on and on and on through all the various metrics that we would normally look at and say, well, let's see what happens if that gets hit. And at this particular point, what we're looking at is a form of a varied form of requisites that need to be met successfully, and each one of them is a big challenge. And that's kind of what the market is looking at here. It's not just purely economic, it's geopolitical, it's all over the show. And the idea of success is admirable. How we get there, I think, is going to be a little convoluted, but at the same time, we are looking at certain perspectives that kind of give us a sense of, right now, instability. And I think that's really what the market is looking at. Down 120 in the Dow at 41,226. The S&P trying to rally. Let's go again. S&P is down 29 at 55.70. Look at this. We've got that this declining trend line that I drew the other day as pretty key support. We got there, and we're now trying to rally off that level. We got that inside track repellent zone in the S&P weekly chart. This is the first week that there's an S, and we've still got 2 days, full days to go, or almost full days to go. We're just 40 minutes into the trading day, not even. So that is going to be a big ask. Does that 9-period moving average in the weekly chart right there, remember, daily, weekly, monthly, this is the weekly, you've got an S. And that S says that the 9-period moving average, for the first time since I think it was just after the, after the October low in the weekly chart, went positive, and that was right there, the 17th of October 2023. So this is the first time that you're looking at some kind of weakness where there's been a very sharp pullback in the S&P itself, in the cash. And what we're looking at here is that with a day and a half to go, that 9-period moving average, there's that S sign saying it is about to close for the week negative, but you've got 2 days to go to change that. Next thing we're looking at is going to be the QQQ, Index 100 trading at 472.52, down 4.28. I drew in this arch formation here because we did have an attempt at long. Interesting. Look how nicely it came up. It gave us some really good gains, intraday gains, but I did raise the stop, so we took a bit of a loss, and just a small loss. And that's I said it is a counter trend rally. That's all we're doing. For those of you who want to play it, there are 2 positions. Both of them gave really good gains. One we actually took profits in. This one we took a little bit of a loss. It was just a counter trend. It's got nothing to do with our bigger move, which is we remain short and down the S&P from way higher up. Let's go to the IWM. The IWM is trading right now down 64 cents at 200.45. it's got to really change this character right here. We've got to see a nice move into the 202.02 was the high. Really, I would like to see 203.50 by the end of the day, just to say, there's an attempt to move to the upside. We can do it. We'll see. Waiting for that 220 signal, 10:20 Eastern time, to see if that's the hour that new players come into the market. Let's go to the SMHs. Hey, those SMHs, SMH, semiconductor, Van Eck Semiconductor ETF, up 72 cents. Good. 221.24. It's not great. Well, it's being helped by Intel. So Intel as a company is just, it's just horrible. It's just done everything wrong, and they've got billions coming in, and yet they still haven't produced anything. Anyway, there's a new CEO. Woohoo! So it has two big gaps to the upside. It's a work in progress. Believe me, it doesn't happen overnight. And all of a sudden, 3 days ago, lousy stock, lousy company, and today, brilliant. Oh, look at this. From 19 to 24, $5 rally. I would say a 20%, almost 20% gain. It better hold. It might hold for a little while, but it still has to prove itself. Let's go on. We've got the, we want to look at gold. So gold is GC. There we are. Gold, nice move up 16 at 29.63. We still remain long. We got the PHYS. That's a physical gold. Now it's making a new all-time high. Sprott physical gold units. We got it at right there, 20. It's trading. Oops. Let me just get that right. I need to just change that for a second. Make sure that we are playing the right game there. So I haven't put that in. Okay, so that with the gold, I'd put this as a down arrow. I'd put this as an up arrow. Whoops, an up arrow. There you are. So this is A, B. It's in leg C to the upside, breaking to your new high in the daily chart. A, B, and C. We're in leg C. And now you've got your D in the weekly chart. Very nice. Weekly chart D, monthly chart E. This has been the leader in the market. It's just been relentless. This is the geopolitical aspect that I always talk about, that gold, in fact, has a component that is an emotional component that says countries, the real biggies, put money in when they get nervous geopolitically, and that's exactly what you can see right here. Let's see if silver's running a little bit. Oh, very nice. Silver is up 0.03 at 33.78. I've liked this chart. I didn't draw this in. For some reason, I thought I had drawn it in. This is the pattern that I've had webinars on. The large rectangle that can go to a peak A, B, C on a very sharp pullback. You can go to peak A, B, C, and even a D just under, right on, or just below, so just above the previous high. In this case, the silver continuous contract at a high of 34.53. That was the week of that was right on the 14th of Feb. And then it pulled back very sharp to the 31.40s, and now it's at 33.783, moving quite nicely to the upside. We actually added to our metals position today, and we'll see if that's going to work out nicely. It was kind of a laggard in the area. The ones I really wanted, I just didn't go for. I wanted the laggard right now to see if we can play some catch-up, and we'll see what happens. I'll be right back. Now the Dow's only down 27, S&P's up 16.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, so it got to the 200-period moving average of 55.88, and now we're going to see whether or not it takes a bit of a breather and it moves over. That's both the 1-minute chart, 200-period moving average, and the 5-minute chart. The next thing is 55.99, which is the 10-minute 200-period moving average. You might need a little time to get there, but we'll see. So we're almost at 10.20. That's where I said we'll see whether the new buyers come in or the selling is maintained. Question came in here. I'll do it right now about AG. So silver is moving up a little bit. AG is, there it goes. That is First Majestic Silver Core. Very nice move up today. Up 24 cents at 638. Up 3.99%. Yeah, that's very good. Leg A in, actually, I can't call it an A because we had that. So that's, let me get A, B, C. So this is still an up mode. It got a bit of a pullback. Yeah, this is nice. And the monthly chart needs a lot of work, but AG is doing very nicely right now. And I just say 599 is the 200-period exponential moving average support. But I would say 618 right now is today's support level. Let's see if that holds. Now, I'm anticipating that the E-mini does move. Let's just see if that's, yep, there it is. And it's almost at the 55.99 level. So I think that much of the selling has been done just for the moment. We've got another economic report coming out today. Today's was actually quite improved. Well, it wasn't anything as bad as everyone thought. There's a lot going on here, and a lot going on says that within the context of this uncertainty, there are certain areas that are doing very nicely. For instance, I was looking at Investors Business Daily over the weekend and then all the way through the week, and there's a stock that's doing very nicely. Now do you get something that's trading almost at the highs or at all-time highs? Well, you know the rule. The rule is stocks that go to all-time highs tend to stay there for a while until there's a big trend change. Well, there is a trend change, but Root, R-O-O-T, is Root Inc. Insurance. They advertise it as super cheap. Leg D in the monthly chart, this, I believe, is a multi-year since 2021. It hasn't been at this level. It once came out, when it came out as an IPO back in October 2020, it opened at round number, because they all open at round number 468.00, hit 530.60. Let me just type that in. 530.60. 530.60. That was October 10, 2020. 5 years, now 4.5 years later, well, first of all, it goes down, a little bit of a pullback. It goes from 500 something to, I would say, down to $3.63. No, I'm sorry. That's way higher than the low. The low was $3.31, March of 2023. Did I say 21 or 31? Doesn't matter. 3.31. I'll check it out in a moment. 3.23. I think I got caught up in the threes because it was actually $3.31. Correct. So, okay. And it's gone from 331 to 136. I mean, you talk about a seesaw, you talk about a whiplash, talk about anything you want. I would say that almost about a 99% decline from 530.60 over a period of three years. Yep, 3 years, less than 3 years. And then it has this rally from March of 2023 to today, where it's at 136. That's fantastic. So, yeah, there are players in this field that are doing very nicely. Was that last month? No, that's this month. Leg E in the weekly chart, a peak C, but it looks to me like it's got enough oomph to go higher. So I show this to subscribers, but it's really tough. All-time high, starting to struggle. Look at this. It's had 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, about 12 days in which to break above the high that was made back in December at the 141 area, and it going up and then down and up and then down, and it's still stuck at 136. So this one, the cluster formation says, I'd rather step aside. But there are stocks that have done well. I've gone through a whole bunch of them, and if I have time, I'll show a few today. Meantime, now let's go to the nitty-gritties. So you've got gold trading up 16 at 29.63. Really nice. So what happens in a situation like this, you got three things going for it. Number one is there's this cup formation in the monthly chart. So purely on a technical basis, you've had this double U formation. In other words, it looks like two U's, like reading glasses right there, and finally it breaks out. So that kind of time building a bowl formation that moves to the upside says, I wish I had this technique. I don't have it as a technical tool where I could just pin it here and then grab that and just swing it up. This says that gold at some point should break into the 3,000s, and then it will turn the 2,800 to 2,700 into pretty good support. This is just in the process of working its way higher at this particular, that's number one. Number two is you've got the whole geopolitical thing where for thousands of years, gold has been the go-to, let's call it a currency for hard times, difficult times, times when you have to leave your city or town and migrate. You just have to move on. I mean, I know stories of people during World War II who put gold nuggets in the heels of their shoes, and that's how they survived. That's how they could pay for things. So that's number two. Number three is in the smorgasbord of the stock market, what have we got? We've got a situation where we have got umpteen different sectors going down, very few showing strength. Even the bonds are starting to be shaky. You had the yields going up, and then they pull back. Now we're not sure whether they're going to continue going higher or not. Tommy, in his program this morning, Morning Market Kickoff, had a really good conversation about yields, and I concur completely. If there is economic demand, you should see yields going up because money is needed, loans are needed. Therefore, the competition for money should see the yields go up. When the yields start to go down sharply, then you got to be a little careful. That could say, hey, a recession or something. I would like to see yields just at least stabilize sideways, maybe even go down a little bit now, but not sharply. We'll see what happens there. So those are the three things in gold. Gold is the sector now that is most attractive, and it has been for quite a while. And we'll see if it's going to stay that way. There will be some competition, but if you're looking at the dollar, which is struggling, it's had a really sharp pullback from the 110 area. They went all the way to the 103s. That's what we said would be some kind of a target, maybe even 102.50, 66, the 200-period moving average. Dow's down 22, S&P's down 6.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks, we're back. We're looking at high-grade copper at 4.87. It's up 0.02. It looks like it wants to get to a leg D in the daily charts, leg C in the weekly, and it's broken above the recent highs. No, not yet. It's very close to doing that. Monthly chart's not that great, but if you're looking at SCCO, one that we had considered as a long the other day, look, now it was acting horribly for the last few days considering copper's rally. Now it's up 3.29 at 93.55. This is the first sign in the daily chart. Weekly chart has a long way to go to get really bullish, and that would happen if it goes to 97.80 to 98.20 in that area. That'll at least start to get the pink 9-period moving average a little bit better. It might not turn it to green, but the MACD will certainly attempt to cross positive. Let's go to let's go to the TLT. The TLT right now is down again. So the TBT, so it's down 23 cents at 89.63. The TBT, that's the mirror image, ultra short Lehman 20-year Treasury bond ETF, is at 34.80, up 21 cents. Yeah, so the yields are going high. So there are a lot of cross currents here. We're looking at leg B, and the MACD did cross positive, and the stochastics rallying, but it's still lousy at 52%. On balance, volume is still working its way higher. Not great. Relative strength has been moving. That gray line right there, that's been moving up. And wait a minute, we've got the 200-period moving average with the 914 about to cross positive. If the 9-period moving average goes green, the yields could go higher. It could certainly go to from 34.80, 3.48. It could go to to this red candle right here. It could go to the 3.521, 35.21 area. Ooh, got to watch this closely. All right, so we've got a couple of things going on here. Did that crude oil. Let me just do the crude oil at CL. Continuous contract, down 41 cents at 67.26. There are a couple of things. I always forget Bitcoin. Bitcoin not acting well. I've been saying that, we've been along for some time. It's at 82,280. I'm just going to say that this is making lower lows and lower highs. Trough A, trough B, leg C to the downside, lowercase in the Chapman methodology. So here we go, lowercase A, B, C, and leg D, and all the technicals are negative. The weekly chart says that the 9-period moving average has just crossed negative, but we're going to wait until Friday's close at 4 o'clock to see if it holds negative. Yeah, that's Bitcoin. All right, so let me just look around. I had a couple of questions. The GDX. Sorry, yes. I meant to look at the GDX. It's starting to improve quite a bit. It's breaking out to a new recovery high. It's at 42.80 and 42.66 was that last peak. Now, what I did in all the others, I gave that a down arrow. I haven't actually updated this. And then an up arrow for this. So this is in a buy signal to buy mode with all the technicals positive. So this is leg A, uppercase on the way up, the peak A, peak B, and leg C. And that should go to leg D. So that's the V shape or the cup shape formation, leg B, gray leg B in the weekly chart. Why do I say that? No, actually, it's a blue leg B. Yeah, this is a buy mode in the weekly chart, and it's been in a buy mode, still in a buy mode in the monthly chart. Van Eck Vectors GDX, a gold miners ETF, and that makes the support at 41.26, trading right now at 42.77. I should say 41.26 to 40.75. Okay, well, that said, now this is fascinating to me. The SLX, which is the silver, SLX, which is the steel ETF, has actually held beautifully. We've had it in this area for periodically, and then we got out of it either with a little bit of a profit or a little bit of a loss. And mostly what we're looking at is it is holding okay. And is that saying independently that the steel companies are going to benefit from tariffs? So far, it looks like it's close to saying yes. I would say if the SLX goes to 63.85 to 64.20, absolutely, that's going to be saying steel, United States steel companies are going to benefit. Let's just do the next thing that a question came about. Yeah, could I look at GEV? So this is GEV, is the GE Vernova LLC. Had a spectacular rally from its IPO down in the 100 area all the way to 440s, almost 450. Now it's down at the 295. It went under the 200 period moving average, above it in the daily. It's just chopping around now. It failed at an all-time high of peak C, very unusual, but I didn't update it. This has the potential, I could have called it, I should have had this as an E/C because it didn't break the low, the initial low of the starting point. Let's do that again. E/B, and that becomes an F/C, not a C, but an F/C, and that makes sense. F/C, and now we can put this inverted hat, which says that's another sell signal to sell mode. Correct. Okay. So, all right, that's not doing very well. So I like to do NVIDIA. NVIDIA is having a bit of a bounce today. It's up 66 cents at 116.30. It doesn't look great. It's just a bounce. It held the inside track propellant zone, didn't go under it. Well, fractionally, but then it pushed back up. But it looks like a sell mode is in place in the weekly chart. So this is just a counter trend rally. And GE having a bit of a bounce yesterday from the most recent low. It hit 212.17 all-time high. That was back mid-February on about the 14th. And then it pulled back sharply to the 186 area, 187, and now it's just struggling. So GE looks like it's taking a bit of a timeout after a spectacular move. Now I needed to do this just to clarify certain things. And that is, I wanted, the IAI. You had mentioned IAI yesterday. What's it telling us today? It's telling us that this market is still very weak because this is the iShares broker dealer and security ETF. Had a spectacular move, and then look, it's just so fascinating to me. Yes, you could have this pattern that I often look at, which is a trend line, and then I draw. There you go. I draw a little parallel line and says that's the inside track propellant zone, and it pulled back and it went to channel D, which is always where you've got to be careful. Other things can happen at 159.90. Then it slumped down to the 130s. It's trading right now at 135 under the 200 period moving average. That is a real problem, and Robinhood is telling us from its action that we're not there. We're not at a decent low at all.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, folks, I think I forgot. I didn't see the question, so I'm just doing it right now. So the question is, what leg is the GDX? I think I did that. GDX is in leg C, a brand new buy signal to buy mode in the daily chart. I called it a gray B, but then when I saw the stochastics at 80%, I said, no, it's a blue. It's a buy signal to buy mode in the weekly chart. Should go higher, but the challenge is the 44.22. What does it do if and when it gets there? And that's going to be the challenge, because that is that 1 penny above 44.22 starts a leg E in the monthly chart, the GDX. So that was the one question. Another question was the SMHs. So SMH, I believe, is getting the bounce today, a little bit of a bounce, mostly because of Intel. The chart looks as horrible. The arch formation in the weekly chart says it did. Look at this. The low that was made the week of the 6th of September, 213.57. We took out 3 days ago. We went to 210. What was that? 210.46. Didn't I? No, I didn't type it in. So, and we closed above it. That's important because this can make another little arch formation. But my assessment is that if we close at under 208, that 200.49 low that was made back in August of last year with this huge arch formation, that's going to be the target. So yeah, that's what and you can see that in the monthly chart. Now I can draw this in the monthly chart. I had to wait a little bit, and now I can draw in the arch formation that says by April we should be testing that 200 low. That's the way I'm looking at it at this point. Now I'd say that 1020 tells us whether or not there's going to be a rally or whether or not it stalls. My thinking is that we've got another economic report tomorrow that's really important, and that even if we went up by the close today, we would pull back. There could be a kind of a minor close, a small up or a small down. And if we went down, there'll be some buying at the end just because we're waiting for Friday's news. We'll see. But in the meantime, what we are looking at is, you can see by the E-mini, we had the spike a number of times now to the declining 200-period moving average in the 10-minute chart, and it failed. And now we've come down. So that says resistance on any rally attempt is now at 55.76. It'll be 55.87, and then 55.91, and then 55.98. And that's only if we can get to the 55.83 level in the next, I'd say, 15 minutes, just to show that there's strong rebound again. But that's kind of the way I'm looking at it right now. Next question came in, and it was right here. SMHs. I may have missed your and now seeking market down. SMH stocks up as if a separate entity. Thoughts? Okay, so now, Duncan, Steve, I don't know if you're looking at this. Look, here's the daily chart, and it says there's a little move up. Here is the daily chart of the SOXS, 3 times short, and it is down 51 cents at 25.92. It did make a peak D right at that 200-period moving average, which said to me that if there is any strength at all, it has to be by Friday midday, that the SMHs, if they're going to show any strength going into next week, the 28.32 level in the SOX is resistance. Therefore, if the SOX actually rallies today and can get to the 26, it's at 25.84, 26.13 to 26.42 area in the next hour or two, that'll say the SMHs will start to pull back. Conversely, if the SMHs right now, having tagged the pink 9-period moving average at 223.88, if they can get even close at 221.69, if they can get even close to the 222.22 or 222.48 area in the next hour or so, that says, okay, new buying's coming in. But the way it's acting at this point is just stuck in a range. So how you trade I would do a much shorter term on the, I'd go to the 10-minute chart. I think that's how you look at it. So look at the SMHs on the 10-minute chart. You've had a rally going straight up and coming straight down. It's trading up 72 cents to 221.84. Here's the 200-period moving average of the 1-minute chart. At 221.38, I think it is. If we're able to lift off above 222 point, there it confirms. If you're able to close above 221.96, above 222.18 or 22 into that area in the next hour or so, that'll say finally the semis have got some reinvigorated buying power, but it's not really working that way. The one that's working is the SOXS, which the daily chart has gone peak A, peak B, peak C, and it should go to a D as soon as it breaks away from the 200-period moving average, and it should get to the 26.25 area. If it gets to this area, just anywhere in there, 26.32, then the 26.55 200-period moving average will become, that's the inversion, the SOXS. Okay, with that said, I just need to check a couple of things here. Ugly session today, huh? Oh, I didn't finish that. I was asked about, can you finish your analysis of Robinhood? Yeah, so Robinhood had that really good bounce from the low that was made at the 34, I forgot to type it in, right? 34, no, it was 35.23 on the 10th. So we went long the next day. We are long from way down in the 16s, took a little bits off all the way up, even to the 62 level. 66.91 was its most recent high. But what I am looking at is that as a trade, I said only as a trade, for those of you who want to trade, you can buy it. And we've actually had gains. It had a much greater gain. We did take some off for a nice percentage, I think 3% or something, and then it pulled back, and today we just made about 7 cents or something in the end. So cumulatively, it's a nice gain for just a quick trade, but that's all it was, because Robinhood is saying there's a chance that it has to test this low that was made the week of the 20th of Feb at 34.02. Now, a question for me has been, look, you had a spectacular move going from the 16s to the 66 high. Isn't that where you want to get out? Well, I don't think this move is going to take us back to the 16s. I want to keep that core position, but we've taken profits because I believe very strongly, especially as a newsletter writer, that you've got to take gains when you can. You've got to be building up that kitty. And yes, it would have been great on the way up, instead of saying take a little bit off and a little bit, to say, hey, double up, double up, double. You would have made a fortune at the top with that gap. But what if you were still in it and you had doubled up and doubled up? You'd be having huge losses right now. I can't look at it that way. I have to look at it as if my subscribers want to be in the game for as long as possible. The only way you can do that is not to leverage so much that you just get trashed, you just get knocked out of the game completely. Don't do that. You want to be able to keep adding to your capital, and that's what we try to do all the time. So yes, I do think that Robinhood will be coming down a little further. Also, it's really attached to Bitcoin. Like Bitcoin right now is down 1,050. It's just not doing well at all. But I'll be back. Dow's down 154. S&P's down 26. Be right back. Basil Chapman, Tiger Emissions are.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So just before I forget, I had a question about, so there were two questions, and now I can't remember. The first question was, how low do I think Robinhood can go? This is going to be very important. You see the severeness of this weekly chart down move? You can see it better here in the almost pyramid pattern in the daily chart. I said that this is going to be very key. Didn't I cover this? I think I did. I said the 34 area, that was the low of the week of the 20th of December, has to hold. So the question then says, if it doesn't hold and the general market continues just to have this waterfall cascade, just keeps going down, the whole period of the 200 period moving average in the weekly chart is at 26. Do I want to see 26? Not really, but that's, I'm going to treat this as a long-term position for that entry at the 16s. We've taken a little bit off. We ran it all the way to we had a gain of, let me just see here. Let's see, one of the gains was let's see, 230%, and even 370 if you use that Wednesday that I was leaving, and I said take a little bit off right at the, if you can, right at the if it gaps up. So yeah, that's, I mean, those are really big gains. Now what we're looking at is within the context of the down move. The way it looks right now, it's going to break this low of 34.02 made on the 18th of December. That's the way it looks right now, and then we'll have to deal with it. Wait, is that the end of the show? Good grief, the show just flies by. Sorry about that. So I as I said before, by the close today, we might get a little bit better. So waiting for tomorrow's news report, but just the sell modes remain, and it stays that way. Have a great day. Stay tuned for Steve. Great program coming up. I'll see you tomorrow.